the webinar underway. We're now recording, so it looks like we are in progress. Great, guys. Again, Greg for Cyber Trading University. We appreciate you spending some time with us on a Saturday. Hopefully the weather where you are is nice, pretty nice here on the east coast of the U.S., clearing up a little bit. We are looking forward to bringing you our new webinar, our Instant FX Trading webinar. I'm going to talk about some things we haven't talked about in the past if you've joined us for some of my other webinars that we have run. So we're taking a little bit of a different turn, and let's make sure that we give you guys a different look at trading. So first, before we start, as always, want to make sure we go over this risk disclaimer, to make sure everyone reads it. There is a high degree of risk involved in trading, and our past results are not indicative of future returns. Cyber trading and all the individuals affiliated with this site assume no responsibility for your trading and investment results. We're going to make sure everybody reads that, takes a moment, understands that this is an educational webinar that we're going to have today. We're going to give you some really good information, but again, there's risk involved. About Cyber Trading University, CTU is an educational trading institution that's been around since 1995, was established as a leader by first working directly with the SOES trading firms to teach them day trading. Those SOES trading firms are the precursor to what you and I do now as individual investors in the market. CTU was one of the first to establish itself as a quality stock market trading school. Each of our instructors, including myself, has a minimum of 6 years of actual trading experience before they begin to work with students. Over the past 14 years, the CTU has taught thousands of students how to be successful and profitable traders. And CTU is headquartered in the heart of the trading world in New York. Good to see that. It's 70 degrees in Brazil. Albert, I probably wish I was there. Here's me, Masters of Applied Finance from Macquarie University in Sydney, Australia, a BS in Financial Management from St. Joseph's University. I've traded crude oil options at the New York Mercantile Exchange, was the head options market maker for JAS Securities at the Philadelphia Stock Exchange. While there, managed a team's portfolio of risk, about 10 floor traders, was a market maker during that time also in the Dell Computer, which at the time, 20 years ago, was the busiest equity option traded in the world, only traded in Philadelphia. Directed an offshore trading unit for JAS and was qualified by the ISC as a DTR. So, Steve, if you've got no sound, you may want to privately hit our team in New York. They may be able to help you. Here's what we've got for next week's Forex webinars. We're going to repeat this one next Wednesday night, 7 p.m. If you want to come back and listen to it again, it'll also be available on, we'll have it on file, but you can come back, tell your friends. We're going to be holding the same. If you find the information useful, make sure you can tell your friends about it. And then we're going to follow it up. It looks like that may be the wrong date on there, on that slide. So let me tell you that the date is going to be, let me get my annotation out, and I will annotate for you. It's going to be Thursday, April 10th. So it's not going to be February the 13th, because we're not going to wait a year to talk to you guys. It's going to be the 10th, and it's going to be the 10th at 8 a.m. And we look forward to seeing you guys there. I'm going to be in the room live, doing some trading, showing you some opportunities, showing you about what we do at Cyber Trading University. So we'll be doing that live. And again, that will also be free. Those links are available. The other thing I do want to tell you is we're going to make sure that when we do that trading, we'll try to come up with some trading opportunities for you for your demo account. And let's get into the presentation. I know everybody's got lots of things to do on this Saturday. I want to make sure that we can fit in our piece of that into your day. I just want to talk about real quickly, why do we want to trade the Forex market? What's the big thing? We're going to give you a quick glimpse before we get into actual nuts and bolts of trading. But it's the largest financial market in the world. Easy to trade up and down markets. Now, this is important because what you'll find is a lot of stock traders are very programmed that up is good, down is bad, and it gives you sort of a one-way lean in the market. If the market's trending down, it can be difficult because of the rules in place, the downtick rule and such. You may not be able to to profit as easily in a down market. You don't have to worry about that in the Forex market. Selling, buying makes no difference, just as easy to execute a sell order as it is a buy order. The risk management tools are phenomenal. For example, FXCM is our sponsor today, bringing you this WebEx. The team at FXCM has a phenomenal, actually two versions of their trading platform. The MetaTrader, which is the one that I prefer, they also have, I think it's called Trader Station. Let me see if I can find the exact name. MetaTrader, and I can't remember the other name. I think it's Trader Station, but it's more of a dashboard view of trading, and all that comes free with simply opening an account at a broker like FXCM. 20 years ago, if you had the analytical firepower that you can get for free by simply opening an account at FXCM, you would have had to have paid thousands of dollars a month. I can remember when we used to pay for a service that brought us charting and analytical stuff, and it was, there we go, thanks, it's Trading Station. You're exactly right, Dave, thank you. Kevin, thanks too. We used to pay a sizable amount every month. Now again, this is, early 90s when you're talking about the ability to get this information. It was literally, we had to leave our machine overnight, and there was this gigantic download that happened every night. So bandwidth technology has really exploded and makes it a lot more easy to analyze your trades, review what you've done, backtest what you've done, and profit. You really are immune to those insider trader things that you may know about the equities market. The data is pretty clear because it's not one company reporting data. The data, when we're talking about it, is countries. Now, again, some of you out there shaking your head saying countries can manipulate their data. Yes, but much more difficult for an entire country to manipulate the market. So a much more level playing field. And you've got the ability to trade with margin. You can set up a brokerage account with no commissions or fees. So you simply pay the bid-ask spread as your fee to enter or exit those trades. And the ability to use margin makes it very helpful. Margin is a great thing when used properly. The other big advantage, if you're trading equities, you're looking at 5,000 U.S. equities. Where do you start? But you're really only talking about 6 major U.S. dollar pairs and maybe 18 major world pairs. Now, we could quibble about whether this pair or that pair is a major pair, but the key is you're looking at a dozen, maybe 15, tops 18 pairs that you'll be looking at over the course of your trading day. And the ability to focus makes your life a lot easier. You just focus on these currency pairs and find trading opportunities. And the advantage becomes you get familiar with the underlying trading. You understand the way it does. We've got Rob chiming in that Japan manipulates the markets for sure. Well, you get to know, for example, what the Japanese in general market, their central bank may do to influence their currencies. We're going to see that in a trade that we're going to show an example of later today in our presentation. I've got charts on that, but it allows you to focus and get familiar with the movement of the underlying, and you begin to develop an eye. And I reference this later in the presentation, but you develop an eye for what's going on. And there can be times when you look at a chart and it will look one way to you based on the underlying and its past history, and you can see a very, very similar chart and have a completely different feel based on the underlying and the history that you develop by spending the time building up some knowledge on the particular pairs. Well, it can be difficult to do with an enormous U.S. equity market, but the Forex market offers you the opportunity to focus on a strict 12, 14, 16, 18 pairs. You can even focus on less as you begin. Get used to 2 pairs, get used to 3 pairs, and see how they move. Not only how they move in the market themselves, but how do they move in relation to the other pairs in the market. There are times when you'll find that specific pairs may move in the same direction. For example, if you took in the past, you may have, if you looked at a pound dollar, Swissy dollar movement, those charts look relatively similar, and you have to be careful that, hey, if I'm on a short side of the pound dollar and I'm on the short side of the Swissy US dollar, like I'm really kind of, if I've got pairs that move in sync, then I'm really kind of double short. I've got the same bet on twice, and you got to be careful. Make sure you understand that to check if there's a positive or negative correlation. And sometimes, you know, you can be long one pair and short another pair, but because there's a negative correlation, you effectively are waiting for the same move. So you could have a situation where you're double right, or, you know, hopefully not, but double wrong. The ability to trade when you want. Nobody here is going to have to quit their job, at least not yet, to become an FX trader. And whether you're checking in from, you know, Brazil, or you're checking in from anywhere around the globe, there's time during your day, whether if you work a regular normal work day of 9 to 5, or wherever that may be around the world, there's trading opportunity if you're willing to put in the time around that. Here in the East Coast of the United States, there's a lot of good trading that happens very early in the morning when most of us don't have to do our full-time jobs. And you can trade early morning U.S. East Coast, which then is really the mid to late day European session. Or for someone who likes to, you know, is up at night on the East Coast, you can trade the Asian session overnight, depending on your schedule. But it allows you to find opportunity wherever you are on the globe and whatever your schedule is. You'll be able to find deep and accurate markets. The trading platform available at FXCM allows you to see the markets that are out there and allows you to execute with very, very little slippage. Again, I'll have people who will tell me, hey, Greg, my strategy is great, but I just lose money because of the bid-ask spread. And I'm a firm believer that if your strategy is failing because you believe your strategy is failing because of the bid-ask spread, you're probably kidding yourself. It's not the spread, it's the strategy. And you have to make sure that you understand what you're doing. And, you know, paying a couple of pips to get in or get out, yes, has to be taken into account and is a factor in making your trading decisions, but it should not be the reason why you make or lose money. And without commissions, you're looking at simply a give up of a couple of pips depending on your broker. You can also trade how you want. We're going to show you today much more of a day trading style of FX. In the previous presentations that I've done recently, we've been talking more of you would probably call it more of a swing trade or a longer term trade, where you might be in a trade for a few hours, a day, overnight. You might be in the trade. I had one or two this week where I was probably in it for a couple days. With the appropriate stops in position, but it wasn't getting a lot of movement and stayed in the trade. Well, if you're somebody, I was talking to one of my partners up in New York at CTU, and I told him that I was changing the focus for this presentation to more of a short-term trading, more of an in-out, trading more volume, kind of get in, get out, a little more frenetic pace. And he said, Greg, he's like, I'm really glad. He said, because I've listened to your other stuff, and my personality is much more suited to the get in, get out, get in, get out, get in, get out. He wants to be doing some trades. He doesn't want to stare at the charts. He wants to do some trades. And I said, well, make sure you're listening to the next webinar, because that's what we're going to talk about. So if you're somebody who has the time to sit in front of a screen for an hour or two a day and can actively trade in and out, you can find a strategy that works for you. But if you can't do that, and you're someone that needs to be able to put a position on and monitor it maybe away from your home using wireless devices or any of the available software packages that are out there, that sort of trading is available to you too. And as I said, nobody here needs necessarily to quit their job just yet. Maybe if we get this right, some of you have that opportunity. I read an email from one of Fausto's students who has done exceedingly well in our cyber group, which we're going to talk about in a little bit, and has had a great quarter, and has kidded him that he may be get ready to quit his job. And it was a great thing to hear. Someone's able to make that move. We're going to talk about charting to profit in FX, using charting to find entry and exit and opportunities. And then what we're going to do is we're going to show how we may be able to use that in short-term trading. So when we talk about charting, let's talk about a simple retracement a lot of traders use. And for me, it's a tool that allows me to frame my trades. It allows me to look for opportunity, and it also allows me to try to use the Fibonacci as a way to dictate where are my stops going to be, where are my entries going to be, and where are my exits going to be. And if any of you listen to me talk, people, you'll hear them speak about trading, and they focus on, you know, their profit target. And the first thing I try to figure out, and I do figure out, is where am I going to get out? What sort of support or resistance do I have? What sort of momentum do I have? And at what level am I willing to say, I'm wrong, I'm going to get out of my trade and then reassess? And using Fibonacci retracements, which Fibonacci, for those of you unfamiliar, is a term used in technical analysis that refers to the likelihood that a financial assets price will retrace a large portion of an original move and find support or resistance at the key Fibonacci levels before it continues in its original direction. These levels are created by drawing the trend lines between two extreme points and then dividing the vertical distance by the key Fibonacci ratios, 26.3, 38.2, 50, 61.8, and 100. Anybody here who's used FXCM knows the other way you can draw it is by clicking on the button on the top where the Fibonacci is and clicking 2 times on your chart, and the Fibonacci drops in for you. But what it does is they will also, it will give you a background. Again, I'm trying to frame my decision making with some support and resistance areas, some, again, ways that when I'm wrong, I can get out. If you look at this Fibonacci, the yellow chart, I know a little tough to look at. The red lines are our Fibonacci's based on this chart. And you can see up here was our top. The bottom was down here. And then our key Fibonacci's, 23, 38, 50, and 61. And you can see that this, and I looked at this obviously after the move, but we saw this move down, and move down, put the Fibonacci's in, and then almost like, you know, it was drawn to a magnet, it came right back to this area. And what does that tell me? In and of itself, it may not tell me anything. But what it does give me is, because we normally will find retracement from these points, that I was looking for an opportunity, although in this particular trade back from February, I really had looked at some other things and thought there was, on a longer term, a move to the upside coming. But in the short term, because of a couple different reasons, I kind of thought we might get a move down to here, back to this 23 level. Maybe not all the way down, but we hit the 50. And some of these lines, what you're going to find is some people will say, well, you'll find that that the numbers become a self-fulfilling prophecy. And that can be true. If everybody believes it's going to trade off of that 38.2 number and come back towards 23.6 before moving back to the upside, then, you know, if that's what the market believes, then it can be a self-fulfilling prophecy, which is why you need to know these kind of things. So this is one of the things. Now, this doesn't mean automatically, okay, well, we hit 50, so I want to just go, I want to get short because I think it's going to go down. It's the beginning of the discussion, the mental discussion I have with myself when trying to find an opportunity. We're also going to, again, this is just one indicator. If you go on FXCM's MetaTrader, there are dozens and dozens and dozens of indicators that you can work with to try to find entry and exits. This is just the one I wanted to talk about. This trade in particular did kind of work out. We did get a move to the downside and a little bit of move to the upside. But the other thing we're going to talk about just briefly, the candlestick charts and the importance of them. You can see this chart is built as a candlestick chart. The candlestick graphically describes 4 price points for each time frame. We get the opening, the close, the high, and the low. So that's a lot of information in one little chart. And within the chart, there can be stories. I'm not someone who's going to tell you that I understand or use, the candlestick trading methods, which we've had others on at CTU that have talked about, where this particular pattern is a shooting star, or it's this or it's that. It's not the way I trade. But there are people out here that we work with that can teach you that kind of stuff. I use them because of the information that's provided. If you look at this chart, you can see the green bars that are open being the ups, the reds being the down, and you'll see that. Let me change my color on my annotation to yellow. I think I'll wait till I'll dial in a little more. I'll get you a better look. But each bar represents the open, the high, low, and the close. The difference between the two is that on a red bar, the open is above the close, and on a green bar, the open is below the close, indicating it was an up or a down. This is the way I put them up graphically. If you look at the next one, so here's a bigger view of it. So if you look at, let me just give you this. If we look at this red bar here, see if I can make it show up. I can't really. It's difficult to draw on this pink. Yeah, I won't even bother. I'll use this. Let me take the annotation out for you guys. Take this out. If you look at here, that was the close. That was the open, and this was the low. If you look at this green one here, we opened here, we closed here. That was the high during the trade. Again, just a quick look at what exactly are we looking at for a candlestick chart. We also want to use moving averages. I like using these. Some people use lots of them, and they put a number of them on their charts, and I have some charts that I do that on. But simply, a moving average is a smooth line connecting points on a chart calculated by the average, the price for a specific number of periods. For example, a 50-period moving chart would give you the average price of the underlying security on the chart averaged over the last 50 periods. Some people like to use 200, 50, 100, 20. I will use all of them to take a look, and they can, again, first give you an idea maybe of momentum, of direction, but also can provide those key levels, again, of support and resistance. 50s and 20s, as I said, two of the ones that a lot of people use. This is on my chart, a chart that I use. This was as you can see up here, it's a 50-day moving average, a 50-period moving average. This happens to be a daily chart. So the blue line that's going through the middle here, right here, that blue line right there is our 50-day, because it's a daily chart, moving average. I also just want to talk about support and resistance real quick before we get to the ideas. Support and resistance. Support is in established areas where buyers have demonstrated that they are willing to buy. When you boil trading down to its simplest thing, it does go back to the age-old supply and demand. If there are more buyers at a level than sellers, the sellers will exhaust, we'll call them their bullets, will exhaust their either the currency they have to sell, or the stock they have to sell, or the future they have to sell. It doesn't matter the underlying. And when that happens, buyers take control, the offers retreat, step backwards, and the underlying can move up. So on a chart, a support area is somewhere where in the past, buyers have shown that they have more control of the market than the sellers, and the opposite for resistance. It's an area where sellers have taken control of that simple buy and sell, that simple supply and demand. They have demonstrated that they are willing to sell and have, for a moment, control of the market. Now, those things can switch. They can flip. Support can become resistance. Resistance can become support. But that's just a general definition. Support and resistance are key technical analysis terms. You do find supply and demand equal the equilibrium at these junctures. As I said, the supply and demand exhausts and the price is reversed. It's really the basic building block of our whole market system. Simple, coming from the open outcry, more buyers than sellers, we're going up, more sellers than buyers. At least in the short term, we're going down. Also going to have trend lines, key price points that are the basis for drawing trend lines. You can also use pivot highs and pivot lows on your charting packages. Find support zones and resistance zones. So those are the tools that you will use to try to initiate a trade. Here's a quick overview of a couple of the pieces you're going to use to actually trade. This is from FXCM, their trading platform off of MetaTrader, and the ability to enter multiple trades here, very, very helpful when trading in a quick market. If you're trading in the, short term and you're entering trades very, very rapidly, the ability here to be able to drop in, let me drop the blue back on here, being able to use a stop loss and a take profit as well as the order, you can set these very, very quickly on this MetaTrader platform, FXCM's MetaTrader, and you can get your orders in and get them out very, very quickly. The other piece you're probably going to use when you're putting these orders in, you also can, with MetaTrader, you can drag your existing orders. They show up on your charts right here, and you can grab a hold of those. And once you do that, you can change the bidder offer. A lot of people like to trade off the graphics interfaces. I do too, trying to get orders in and then fine tune exactly where do I want to put my stop, where do I want to put my take profit. And right here I'm showing you, you can grab a hold of that line, hold the left cursor down, drop it to where you need it, and it will give you on FXCM's MetaTrader platform, it'll show you what is your profit and how many pips would that be if you carried that down to that profit level. And again, same thing here. You want to modify your stop, you can either drag it and find a spot for it. And one thing I do want to recommend, I really like this order type as a tool as you're getting ready to do the kind of trading we're going to talk about. The OCO order, to me, is key to doing these trades, particularly if you're going to swing trade and be away from the market. Not quite as important if you're going to be sitting in front of your computer or have, full attention on your screens for 60 minutes, 90 minutes, 2 hours. You may or may not want to, use the OCO. One cancels the other. But if you're going to walk away from the market and leave orders resting on the book, you do want to make sure that they are OCO. You can combine a stop with a limit order to try to take profit and guard your downside. Again, you can make those stops with one trade. You can execute the one side of the trade and removes the other, clearing your position. There again is here. The other piece you can use is a trailing stop. In an active market, this is a very helpful tool. And again, if you would here and modify your trade in FXCM's MetaTrader, you can tell it, hey, I want to take this and make it a trailing stop once I've grabbed it. What am I going to do? And how many pips do I want to make my stop, my trailing stop? Well, you can do it. This is shows you 200 pips. You can pick any level you want. And what is a trailing stop? Trailing stop is a stop that moves with the market in one direction. So if you're long and underlying, your trailing stop would be a sell stop. And if you put it 25 pips below the market, every time the market ticked up a pip, your underlying stop would move up 1 pip. If it came down 10, your stop wouldn't move. And what it allows you to do is sort of ratchet up, follow the market up in an active market. And if it would reverse quickly before you're able to get your limit in place, it will allow you to get that trade off. Let's go to the idea that we talked about, the FX trading profits in 90 minutes. This focus is going to be on day trading. This is going to be, I'm sitting at my computer and I can have my screens up. I've got my full attention on the market, and I'm going to try to make some money actively trading the market. I might in 90 minutes execute 1, 2, 3, 5, who knows how many trades, depending on the day and the speed of the market. Now, if you looked at the U.S. Canadian, this is a 4-hour chart, a very tight screenshot from yesterday. And if you looked at that and said, okay, well, after this move from here to here on that red bar, you know, what happened after that? Nothing really. And then what happened on the bar after that? Nothing really. You might walk away and say, man, nothing happened yesterday after the big move to the downside about 8:30 yesterday morning. You might be thinking, oh, well, nothing happened. I didn't really miss anything. Well, if we took a little deeper look, you know, you might think there's no money to be made in those sort of trades. Well, now in a 1 hour, we start looking at it and saying, okay, well, on a 1 hour chart, here's the big red bar we talked about. But wait a second, we had up, down. Well, actually, check that. Up to here, and then we traded down to here, and we traded up, we traded up, we traded up, we traded down. Hey, maybe there's some opportunity. This is on a 1 hour chart. And a lot of people who swing trade use the 4-hour chart, the daily chart, the 1 hour chart, and look for opportunities that are much longer plays. But we're going to go beyond that today. And we're going to say, okay, let's look beyond that. What if we looked at the 15-minute chart? Pardon me, the 5-minute chart. Well, now we can all kind of find that same reference point of here's where we had the sorry, I'm grabbing my. Here's where we had the move down. But look at the trading that we had from here to here. Now, this is a 5-minute chart. That's about, I think when I looked at this yesterday, that's about 35 pips from here to here. And those are 5-minute bars. So how long are we looking at? I mean, we're looking at from the lows 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 5-minute bars. You know, pick one on either side. There's your 90 minutes. And we had, what do we have? We had a 35 pip move from there to there, top to bottom. Now, please understand, I'm not telling you that you would have caught an entire, or for that matter, or I would have caught an entire, you know, I bought the bottom, sold the top. Anybody you ever listen to who tells you they buy all the bottoms and sell all the tops, they're kidding you. But this move, we had a 35 pip move here, again, on a 5-minute chart, and then retraced almost all of it from here to here. And then, of course, the market kind of consolidated. This is the 5-minute chart, sort of narrowed as we got towards the end of the day. But if you look at the next like 18 bars, say the next hour and a half, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So in less than an hour, it retraced almost exactly back to where it was. And then in the next hour, retraced 20 or 25 pips of that again. So if we go back and look at the people who look at longer-term trading might say, if we look at these charts, nothing happened. I would argue on the 5-minute chart, it did look like something happened. What about this one? This is a cutout version of the previous. Now, this is the 1-minute chart. So if you notice, it was on this chart about, this was yesterday's chart, 1550. And if we look at, so this is about here. Let me show you. From this point here, at the top here where we noted it right here, is about where we go on the next chart, right up here. And it's a graphic representation. And within that move that on the chart before seemed so drastic, and one way, someone mentioned, you know, the waves. We had a down move, we had a bit of an up move, we had another down move, We had a little bit of up move. We had the down move here. We had up moves. You know, you even take it to there. Traded a little sideways, gave a little back, and then boom, back up again. What I'm saying is there are opportunities within these movements. There's 5 or 10 pips. There's 10 or 15 pips within there. These trades don't all have to be, you know, a 100 pip winner. I think on one of the slides coming up, I typed it in, but I'll say it now. I mean, you can put on one trade, and if you make 100 pips over 2 days, that's great. But if you use the exact same number of lots, you probably are limiting your risk if you make 10. If you have 10 winning trades that make 10 pips each. Now, again, you're going to have losing trades. We're not determining that, but there's opportunity to sit within your trading system and make small profits over and over again. And you can get in, be wrong, get out. Get in, be wrong, get out. These are, again, charts from yesterday. And here's the next. This is the end of the day. So if you connected those two charts, you can see 1754 is that bottom, which is 17. So this bottom, so we kind of match it up. This bottom here on the next page is right down there. And again, there's significant amount of movement in these charts. So finding opportunity to sit at your screen and have a very tight stop is there. There's an opportunity for you to find active trading opportunities repeatedly. It's not as if you need to have only trade long term. Again, Rob's putting out there are some, you could take some chart patterns out of these, and that's the other point. The chart patterns that work on a daily chart or a 4-hour chart, those chart patterns work on a 1-minute chart. Now, it's a little bit more whippy, and it can get a little bit away from you. But, you know, for example, and I'm not saying I did this, and this is hindsight. I admit that. So I'm just using it as an example. But if we were watching this 1-minute chart, and let's say everything to this side had not happened yet. So we don't know what happens here. Nothing happens. This is an area where you could say, okay, looks like it's rolled over, but I've got a lot of support down in this area. So as this is coming down, you may say, hey, and again, depending on what your risk tolerance is, you may buy it here or maybe buy it here. And again, the only reason you're not just buying it because it's a support or resistance, but what I'm saying is you know that you've got a bit of a stop right here. And this might be a trade that you want to do. You can, if you buy it here and put your stop maybe down a little bit below, you actively manage it and watch what happens. Now, this is a 1-minute chart, so you're going to find out whether you're right or wrong very, very quickly. Now, in this case, it would have, you know, if you did buy it in this area down here, it did go up. Pardon me, wrong. The mouse went crazy there. If you did buy it in this area, this one, in this case, it did go up. I'm not saying it always will, but those chart patterns, you're seeing people up there, up here, putting in the chat window. It's hard for me to reply to them, but you will see that they're talking about flags and pennants and support and resistance and waves and all of those things that you learn, all the things that you've learned working with the other partners here at CTU, the things that you've learned trading with Fausto. 75% of that stuff applies to trading FX. The opportunity is that FX provides you a deep liquid market 24 hours a day, 6 days a week around your schedule. There are lots of people on this call that are precluded from actively trading the market, the New York, you know, the American Stock Exchange or the New York Stock Exchange, the NASDAQ, the U.S. market from 9:30 to 4 because of their job. Well, the things that you may have learned to trade equities, a lot of those apply. But the beauty of Forex is that you can trade it on your schedule and you can use the knowledge that you had, focus on a few currency pairs, and find a pattern, a trading method that works for you. there are some people that look at the idea of trading a 1-minute chart and it makes them, nauseous, makes their head spin. They can't imagine being in and out and in and out and in and out. Well, and there are others that say, man, I can't put a trade on and wait 3 days to see what happens. The world we live in has become a, instant Twitter, Red Bull filled world where everything has to happen now. Well, the FX market allows you to trade now, almost any time you want, regardless where you are in the world, almost regardless of what you do for a living right now. So that's what we're trying to point out here, that this opportunity to trade FX, the skills that you learn to be a day trader or a swing trader at trading equities apply. The skills that you've learned as an FX trader that maybe you use to swing trade or longer term trade, the ideas, the concepts, the principles, when well learned, they apply. So in this chart, if we took there's nothing that says this has to be a 1-minute chart other than the scaling and the graph. So these ideas that you have, the opportunities that you have, are available for you trading these quick 5-minute, 1-minute charts. Easy to find these support and resistance numbers. My chart here having the pivot points on there, helpful to find levels at which we should be able to trade against. And I'm a big fan of finding an area where we can do, and I'll show you coming up on the next trade, where I can put the percentages in my favor, where my stop is not too far away, but I can see profit on the horizon that's a multiple of my stop. And what I mean by that is if I can get my stop to be half as far down as my profit is up, I'm usually then in pretty good shape. That's a really good, if you can achieve it, 2-to-1 ratio. Now, you do have to be careful when you're trading, this quickly, because it's very easy. Trust me, I've done it. You can be on the wrong side of the market 2 or 3 times in a row. The key to that being you have to manage your money. The mistake that people make is, well, and I'm going to just use a round example. If you trade a mini lot long term, and you trade like a swing trader, you're going to trade for a couple hours, maybe it's a day, or it could be 2 days, and you're trading one mini lot, which is 10,000 units. Let's just, for argument's sake, say we're going to put it in dollars, that 1 pip is $1. Now, depending on the currency pairing, it can be more or less than $1 US when converted. But for our example, let's just say it's $1. And you're maybe not going to watch it all the time. The concern is, for me, if you're managing your money properly, that you might say, well, now that I'm sitting in front of the screen, I'm usually trading a mini, but I'm going to trade 5 because I'm only going to try to make 10 pips. So I'm going to kind of bump up the bet, and that's a fatal flaw. You have to make sure that you're taking proper money management steps, regardless if you're trading. And it's very easy to do. Trust me, I sit here all day and struggle with that when I'm trading. That if you're trading on a short term and you're only looking to make 10 pips, and let's say you're trading a mini lot and you're trading 10 pips, well, 10 pips is $10, and somebody will say, well, I can't really, it's not worth my time to make $10, so I'm going to trade 5 and try to make $50. I would prefer you try to make $10 and manage that trade into maybe moving up your stop losses and turning a lot of those 10s into 15s, and then doing it again, finding opportunity again, and keeping the losses down. Very rarely, it can happen, but very rarely will you go out of business, will you blow out your account taking profits. And being able to go into the market on a 1-minute chart, on a 5-minute chart, and take 10 pips, 15 pips, 20 pips, 10 pips, 15 pips, 20 pips, and lose 5 or 10 pips and 5 or 10 pips, it will keep you in the game. It will keep you, and the longer you can do this, you're going to build up expertise. Anything that you've done in your life, you weren't as good at it the first time you did it as you were the 1,000th time you did it. And the idea here is, if you're going to actively trade, it's a quick way to get a live or demo account kind of indoctrination into trading. It allows you to sort of see your mistakes more quickly, learn from them, and then find ways to manage profitable trades. And I'll tell you that you're going to trade on these lower term charts, these 5 minutes and 1 minute, and you're going to spend your day kicking yourself, and you have to get over that. There's a trade coming up, the dollar yen yesterday, and I got out and on a little bit tiny winner, and as soon as I did, of course, it traded down like 10 or 12 pips. And I was mumbling to myself, and I'm out of the trade, so it's not as bothering me as much. I'd made a couple bucks, but I mumbled, and then later in the day, I looked at the chart because I wasn't looking. I was kind of done for the day, and it traded above where I had gotten out, so I would have been short. So if I'd held the trade, yeah, theoretically I might have been able to make a few, but there's every chance in the world I could have held it too long. So I executed the strategy that I planned going in. Move on, next trade. Now, if you look just as a quick, I want to show you that these, like something like a Fibonacci, you can use this on a 5 minute chart. There's nothing that says you can't. People would argue it may not be as useful, but this was our high on the Fibonacci. Here was our low. We got up to the 50. In fact, right here we traded a little bit above it. But after we got through that, we came all the way back down to the 26, traded up, traded down, traded through here, but got up near the 50, and then came back off at it as the day ended. This just happened to be yesterday's chart. I just wanted to make the recognition that, again, if it's a 5 minute Fibonacci or a daily Fibonacci, in context of what you're trying to do, there's information that you can glean. It's not the only thing that you would use to jump in or get out of a trade, but it's one of the tools, and they work as equally as well, whether you're using it at 5 minutes or a daily chart. So here's what we want to learn from that idea. You want to apply the same trading strategies you've used for equities, for options, for futures. All the things you've learned, you bring to the table. You're ahead of the game with FX. If you take the time as a new trader to learn them in FX, know that you can then apply them to equity options or equities or futures. The same general principles can apply. You definitely want to focus on a very short-term trading, 5 minute charts, 1 minute charts. Maybe use your 15 as a general trend for your trading day. But this is going to be something where you need to be sitting in front of your machine to actively manage. You're going to use quick tight stops. You're going to take quick profits. Using OCOs and trailing stops are another way to manage it. Because the other reason you want to think about those OCOs and trailing stops is it's very likely that you could have more than one position on at a time. NinjaTrader offers a great software package that you can couple with FXCM's MetaTrader that allows you to manage your trade really well. The NinjaTrader package will allow you to knock your trade down in thirds. I believe they can go down to thirds. So if it goes profit, you can set it automatically to say, take 1/3 off, move my stop to this level, take another third off, move my stop to this level, slide my target, whatever you're going to do. But you want to make sure that if you've got more than one position on, you've got these OCO orders out there. If you're in a quick market, if you don't, you could divert your attention and get caught in a position that you didn't want or you didn't anticipate. And here's what happens. If you get yourself into a position, my final thought here before we go to our last trading strategy, if you get yourself in a position where you've made a mistake, get out. I've learned this the hard way. I've learned this over many, many years, working with lots of traders. It's a very difficult thing to do, but once you recognize a mistake that you've made, you bought instead of sold, or whatever it may be, you are going to find that it's a lot more difficult once you linger in the trade. Rarely, if ever, will you find yourself in a position where you made a mistake and you got lucky. Now you may, but on balance, they call it mistakes for a reason. If it was a mistake, take your loss, reevaluate, and get moving. Here's what I want to remind you. Pips or pips. Make 100 pips a day in a 2-day trade. It's the same amount of money as making 10 pips 10 times in 2 days. And I want you to work on building your confidence and improve your eye for the pairs you trade. You're going to find that, hey, I have a really good feel for the dollar yen. But you know what? The stupid pound I can't get a feel for, or whatever it may be. And again, play to your strengths. When you find out that certain pairs work, then trade them more actively. But don't necessarily worry about, oh, I've got to trade them all. You may find some that you look at the charts, you look at the opportunities, and it's just, no matter what you do, you see the opposite. Unless you want to go, George Costanza, those Seinfeld fans out there, where you feel that if everything I do is wrong, then the opposite must be right. You don't want to develop a trading strategy where you're kind of fading yourself. So that's what we're going to hope that these short-term trades can do. And I'm going to give you one trading idea, a trading technique that you may want to use to try to find some profit in the market, particularly on a short-term basis. We're going to close the day out with this idea. Weekly closeout reversals. And what I mean by this is, what you're looking for in this kind of a trade, look for an actively traded pair that's made a strong move over the past week. I don't care whether it's up or down. But what we're talking about here is, since the currency market doesn't close, it opens Sunday evening on the East Coast U.S. time and doesn't close till 4 o'clock or so Friday afternoon East Coast time, that without a close, you'll find traders are more likely to hold their positions. The unknown happens when the market's closed. People worry about the unknown, and the stock exchange, you'll find people will get out of their trades. At the end of the day, a lot of times they may not want to carry them overnight for lots of reasons, hedging, margin, all those reasons. But we're looking for a pair that's had a strong move over the past week. What we're looking for there, traders who have made money will naturally look to take profits as the market moves towards the close. It's just natural. Happens at the end of the day, New York time. You'll see a lot of times the market will reverse in either the stock market in general, if there's been a big move, the indices, or you'll see individual stocks that may have performed well or poorly. You'll find traders looking to square their positions. And knowing this is an advantage. This trade should set up for FX in the morning of the New York trading session. So once you've had a big move, you should look after the 8:30 or so, start looking at on Friday and say, okay, do I have any candidates here? Are there any trades that have gone on that over the last week that may be a candidate for people looking to reverse? Again, it's a reversal trade. We want to go against what everything's happening, because these things usually settle out. I'll tell you honestly, 2 weeks ago, I put two small trades on Friday morning, and one was the reversal. The other, for another reason, I was effectively spinning into the wind. I didn't realize it. I put it on. I went the opposite of the reversal and got taken out. And after I put it on and realized my mistake, I was like, oh, what an idiot. I can't believe I'm so focused on the one entry reason that I had, but I hadn't looked at the broader market and thought more globally of, okay, it's Friday morning. This thing has had a good move. It's really moved down. We should probably see maybe a little bit of an up move to reverse what we've seen. I made the mistake 2 weeks ago. Don't want you to make the mistake. So here's yesterday's, the end of the day. This is the daily chart for the dollar yen, and this was a daily. The last bar is, we're looking at here, that is the Friday bar. But as we went into Friday on a daily chart, you can see we had 1, 2, 3, 4, 5, 6 up days in a row. So the market had moved pretty strong to the upside for this trade. And I'm now looking to say, okay, where can I get short to maybe take a little bit of a ride with the market and those who have profited? It's similar to in the old days when they used to have you'd see a lot of stocks that wouldn't open in the morning. There'd be a delayed opening, and my buddies used to call it the McDerminator trade. I would look for stocks that were going to open on a delayed opening on the New York Stock Exchange. Why New York? Because there were specialists who had to make a market to open that stock. And the longer it went, the more I liked the trade. And what I would do is the initial trade on the New York Stock Exchange is normally the specialist has to do the opposite trade. So if bad news comes out on a stock and it's going to open a half an hour late, everybody and their mother is going to be selling. Well, who's going to be the one person that's going to have to buy there by definition? The specialist. That's their job. So if they have to buy, what do we know? They're going to want to buy as low as possible. And what's the other thing we know? They're sure as heck going to want to get out of that position as quickly as they can. And if you go back and look at those, when you hear of a delayed opening, what normally will happen is you'll see an opening to the downside or even the upside. And on a very short term, we'll see a quick reversal. And that normally is the specialist trying to move the underlying up so they can get out of the stock they just had to buy. And I used to always put a market on open order with the specialist and try to buy and make a quick flip. The same principle works here. I'm looking for an opportunity to go with the prevailing market, well, opposite what has happened, but knowing the psychology of traders, what we think may happen. And if you look at, this is a 4-hour, and the 4-hour reversal, this was, the chart was done at the end of the day, but you can see when we got up towards this high, we did end up with that reversal. And if you dig in even deeper, this is the longer term view on a 1-hour chart of that reversal. This high up here still being, the high that we hit. Rolls out a little bit more. So, and then if we look at, pardon me, the 15-minute, you can see it was a much more precipitous drop. Now, let's be clear. Yesterday did have a, if you go backwards in the chart, I'd probably have to pull it up, but there was a down move on news also yesterday. The U.S. unemployment data came out. But what we had happen was, and this was at the end of the day, these are the last, 15 minutes, these are the last 3 or 4 hours of the day. Once we hit these highs, we had people getting out of the trade. And then on the 5-minute, you see a similar chart. And the trade that I did yesterday, I believe if you look at this 1 minute, this is probably the general area, like 103. I'm going to draw a dot in here. I think if I went and pulled my trades up, I probably did the trade like in this area somewhere. And the reason that I did it was relatively simple. The setup for me is what I was looking for. We had a really long, strong 6 days. So here's our 6 days up. And as we dialed in, these are the last 3 or 4 hours of trading. This is Friday's trading rolling over. And as we get to this 1 minute, when I got in on this trade, the idea is that if I can get in here in this sort of area, I've got a relatively small stop. Because if it breaks out of this number, I'm wrong, and I'm going to get out. But if you look at the opportunity, and this was from like 1539, so let me see if I can go back and find it on the other chart. Trying to find the chart for you guys. If you looked at, you can't see it on here. Well, here, this is the 4-hour. You can see that if we broke this trend area as we came down, there was some open air down here. Now, we didn't get a move all the way to the downside, but we did get a pretty decent sized move. So the reason that I did it was a couple of reasons, but one of the main reasons was that when I put this on, I had a tight stop. I knew that once I got above this high, I was going to have been wrong, and I was going to get out. So I had a relatively tight stop, and I had some room to the downside where I thought if this thing, while people were trying to get out of the way, the guys who had made their money and have had winners were trying to get out, the sellers are probably going to, the buyers are probably going to get out of their way and maybe take this thing down. Now, it happened that way, but it's the psychology of traders that leads you to this trade. They won't always happen, In fact, the week before, like I said, I think I had a similar trade on one, and I messed up and went against it. It was dumb because the psychology of trading matters, and that's one of the things you'll hear Fausto talk about. So remember that when you're looking for opportunities at the end of your week, hopefully after a week of winners, if you've had a pair that you've ridden up for a couple of days, look for the opportunity to go opposite, knowing the psychology of trading, and look for an opportunity to make some money as traders close out their positions for the end of the week, the close of the markets, take away some of that uncertainty. This trade benefits from the natural ebb and flow of all trading markets, as we said. Similar to the price reversal you may be familiar with at the close of each equity trading day, you want to make sure you use a tight stop, and you want to actively manage the trade. We're up against 1 o'clock. I want to give everybody an invitation to book an appointment with one of our educational advisors. Fausto and the team, we've got a cyber trading group. We're making you a special offer for this week. For $19, you can join the cyber trading group, and it's available from, I think the next slide shows it. It's available for 5 days. So you get 5 days. We have a live room, 8 till 4. Fausto's in. You can see his screens up trading. Next week, I'm going to be on every morning, 8 a.m., giving you kind of a quick feel for the market. We're going to do about 15 minutes, give you an idea. Next Thursday, of course, we'll be doing a full hour on our WebEx. But our cyber trading group is really great. Again, this is brought to you by FXCM. It's simply $19. For $19, you can sit and learn and watch how does Fausto teach the traders. What's Greg looking at as we begin the market? You can register online, or if we go backwards here, you can call 877-70-CYBER. We've got people available there now to talk to. It's a great investment. It's as close to free as we can get to give you a look into how every day Fausto's in the market. The Cyber Trading University team is in the market. Every week they bring in guests to speak. And all day long, the screens are up. You can see exactly what's going on. And one of the best ways to learn how to trade is to copy. Nothing wrong with copying. Everybody kind of learns that way. So because you came to this presentation today, they're offering a $19 promo. You get it for 5 days. You get trial membership, access to the Forex Foundations, and we're going to have a workshop at the end of this month. We're going to be doing a 2-hour workshop on FX trading, specifically about signals and things. So you can follow that link, cybertradinguniversity.com/cybergroup/trial. You can see that my friends back in New York have put up that link in the chat window for the cyber trading group. And here's the idea. You're saying, well, what the heck's a cyber group, Greg? Well, it's a live trading chat room, open Monday to Friday, 8 to 4. Trade with Fausto and the team. Watch the trading screens all day long. Market review, trading ideas, activity. You can track equities. You can track Forex, the options market. There are 2 live meetings daily. You get to access the recorded ones if you can't get in one day, but you want to see what happened because you heard that they did really well. You can go back and see it. Plus, the bonus, we're bringing you the Forex Foundations workshop at the end of the month and the ECNN book workshop, which is for high-frequency traders. Again, $19 gives you 5 days. Let me think. 5 days, you're looking at about, 50 cents an hour, best case scenario. So well worth your time. If you're serious about trading, pushing your trading forward, the only way to do that is with education. And this is a free look to see real traders, members, at CTU in actively trading every day, see what's working, see what's not working, find a way to trade for you. So I highly recommend this. And again, you get to come back at the end of the month with a sponsorship from FXCM to sit in my 2-day workshop, and then we're going to do another live trading. So again, next week, it's going to be April 9th, and again, not February 13th. It's going to be February 10th, and it's going to be at 8 a.m. So I really appreciate everybody being with us today. I hope you enjoy the rest of your weekend. Make sure we don't have anything left behind here. Again, last, with a big smiling picture of me, the $5 promo. Trade for 5 days live. See how they do it. See how Fausto makes money in the market, how he brings traders along, get other ideas from other traders, which is really helpful. It's hard to trade alone. It's so much easier to have a community around you to support you when you're winning and when you're losing, help you learn. It's a great communal environment. You'll appreciate it'll be a great $19. Again, you can either call 877-70-CYBER, or your direct line is 561-280-5350, or follow the link that the team put up on the screen. We hope to see you then. Again, 5 days trading. You get to come back at the end of the month and do a workshop with me and another live trading. Great way to get off your trading in 2014. We hope to hear from you very soon. Greg McDermott for Options Trading University signing off. Everybody have a great weekend. Thank you.